Hi guys, this is Ruby with MRB Financial. Thank you so much for joining us today on our beautiful month slate today. Today's topic of the week will be deductions and credits. So let's get to it. What is a deduction and what is a credit? Essentially, they both basically do the same thing. They just do it in different ways on your paperwork in your tax file. A deduction is it lowers your taxable income, thus reduces your tax liability. Basically, what you're going to pay your local and your federal government. So let's say I live in the state of Illinois. So in the state of Illinois, I will pay them my tax bill and I will pay the IRS my tax bill. So what a deduction does, it lowers the amount that I'm going to owe them, basically. How does a deduction work and what is a deduction? So I'm going to throw some examples for you so that as you're doing your taxes, this kind of rings a bell for you. So a tax deduction, basically examples are your student loan interest rate. So you basically, for the interest rate that you pay to your lender institution, that's a tax deduction at the end of the year. They'll send you like a 1098-T form and they'll tell you this is how much you can take as a deduction on your taxes. Your mortgage interest rate, same fancy form, just a different number, I believe. And they also give you the same amount that the interest that you pay them, that will be also the deduction. A credit. So before we move on to credits, a deduction basically goes off of your tax bracket. So let's say that you are in a 24% tax bracket and you have a $2,000 deduction amount. You are not going to take the whole $2,000. You're going to take 24% of the $2,000. So you're going to multiply $2,000 times 24%. You're going to get $480. That's basically your tax deduction, okay? A tax credit, on the other hand, is a little bit different. A tax credit gives you more for your buck. Example, a tax credit, it's a child tax credit, for instance. So let's say that you make $100,000 and you have 3 children. The current child tax credit is $2,000. So you have 3 kids, you just stacked up a $6,000 credit from your earned income, from your taxable earned income. Another example that I could definitely use too is the residential credit, the residential energy credit. Basically, think of all those people that are making energy efficient updates to their homes, like a solar panel. They get to take a credit for that. It's 10% of the cost of the qualified energy efficiency improvements and 100% of the energy property cost. So basically, look at those two differences. That's what you're going to get, either 100% or 10%. That is basically the gist of both of them. I hope that this was very enlightening for you and you were able to tell the difference between the two. To check out all the credits, do log on to the IRS website. They will go ahead and list them up for you. When you do have questions about your financial house, please do not hesitate to reach out to us. Don't forget to subscribe to our YouTube channel, follow us on Facebook, and we are now on Spotify. We have our first segment out. Is Business 101, basically how you look on paper and what you should be doing. So for our new business owners, this is great information for you. For our seasoned business owners, this is great information for you to remember everything to show up with and the appropriate questions to ask according to the year in business that you are currently. Thank you so much. A pleasure to monthslay with you today. Again, this is Ruby Velasquez with MRB Financial.